99% of you are going to be too lazy to apply what's in this video. So instead of being lazy, actually take some action. I'm going to show you guys what psychological levels are and how you can use them to get very key entries and find out when the market is going to reverse. Now also remember that my last and final Forex course is dropping on June 30th at 12 p.m. PST. There's only going to be 100 spots open, so if you want to join, make sure you have your alarm set and make sure you're following me on Instagram. Also, I need you guys to like this video. It shows first off that you support me, and also you guys need to understand that all my content is free, but it takes me a ton of time and energy to make these videos. So if you guys could like this video, that'd be awesome. Now without further ado, let's get into this video. Okay guys, welcome to my screen. We're going to get right into it. What I'm going to do is I'm going to go on USDJPY. I do have this already marked up, my psychological levels for US 30, so you guys, if you want to copy these real quick, you can. Usually what I'm doing is figuring out for US 30 my psychological levels between 2,500 pips. So from 3,000 or 30,250 to 30,500, that's a 2,500 pip difference. But we're going to go to USDJPY and do this, and what we're going to do is go every 100 pips. So let's start with like the most recent zones right here. So the first one is 134.300. Actually, let me start at 134, okay? So let me go right here and type in 134.00. And then what I'm also going to do when I'm marking out these psychological levels is type in the text 134.000. And then I'm going to have it to the top right. I'm going to click OK. And then I'm going to lock this. So we're going to go with Forex pairs. What I would do if I were you guys is do it every 100 pips or maybe 200 pips. It's really up to you. But what you want to overall figure out is where are the psychological levels? Where is the market hitting a certain zone and reversing? And psychological levels do act as support and resistance. And we can even see right here, when it hit this psychological level of 134, we can see it hit it right here and then bounced off it and had a big push to the upside. And then once again, we see it hitting it right here one more time. And it seems we're moving away from that zone. So what I'm going to do is I'm going to measure from this zone. I'm going to go up 100 pips. Okay, so our next move, okay, 135. So it's going to be, our psychological levels are going to be 134, 135, so on and so forth. Okay, so next one. And we're just going to drop the horizontal line wherever we want, and then we're going to mark it up. So 135.000, top right, coordinates, same thing, 135.000. Push OK, and then we're going to lock that. Now the next zone that we're going to get is 136. Same thing, 136.000, text 136.000, then we're going to lock that. Now overall what I'm doing is I'm just getting the psychological levels within our current price. So I'm going to have a psychological level at our near current price, and then I'm going to have probably 2 or 3 psychological levels above that level and then below that level. So we already got one at 135, 136. So now let's get one at 133 and 132. Okay. Oopsie daisy. Okay. 132.00. Same thing, coordinates 132.00. And you guys are going to be able to do this for any pair that you want. Okay. Now I need to get 133. I don't know how I skipped that before 130 or 132, 133. Okay. And then lock it. So I am doing this also on the 1 hour time frame. So at first, what I want you guys to do is watch this video, and then once you're done, go and apply it to your chart. And you can do this with any specific currency pair that you want. And the cool thing about this is it's going to take some testing. What I want you guys to do is go to the currency pair of your choice and mark up maybe a psychological level every 100 pips. And then if you're trading indices, maybe every 1,000 pips, every 2,000 pips, every 2,500 pips. It's really up to you. Now with indices, they are more volatile. This video is sponsored by my program FX University. Go to the link in the description to sign up, or there should be a link on this page. Once you go to join now, you're going to go to get started, and once you do, we're going to give you a code for 15% off. Go right here where it says to add promo code, type in FX1 and click apply. So they're going to have stronger moves up and down, or to the up and down side. So we can see right here, rejected the psychological level and then pushed down to the next one, and from this zone to this zone, that's a 2,500 pip move. Now with Forex pairs, I would just focus on maybe every 100 pips. That's a pretty ideal move with Forex pairs. So this is how we're going to keep our charts right now. So what I want you guys to overall do is I want you to go back in time and look at these levels, see if these levels are adding up. So we can see the 135 is a pretty beefy level. What I would do if I were you guys is I would go to the daily time frame first and look at these levels. So look at how we had a very strong reaction 1, 2, 3 times to the 134 level. 3 times it hit it. So we're basically seeing like, we're already in an uptrend. We're rejecting this level right here. And also take note that the wicks on this candle is deeper than the wicks on this candle. The wicks on this candle are deeper than the wicks on this candle. So we are wicking this level again, the 134, but we could possibly be done wicking this level right here, and maybe our next level we're going to hit is the 135. Now we did hit the 135 on yesterday's daily candle, so if I were you guys, I would honestly go long on this, and I would aim for the 136 and see if that level could be acquired. Now what I want you guys to also do though is look back in time and see the last time that we hit that 136 level. So we can see going all the way back to 06, it hasn't even reached those levels, which is pretty crazy. But if we're going back right here, we are in an uptrend, so it's most likely going to keep pushing up. There's no reason as to why it shouldn't keep pushing up. So this is pretty crazy right here. What I would do if I were you guys, if you're using USDJPY, is I would start marking up all these levels right here, because I'm looking at 131 right here, and we hit it right here and right here. So I'm going to just mark it up so you guys can see visually. Let me type in 131. Okay. Okay, and we can see the same thing. So look how it hit it right here as resistance. Then we broke through, but we retested it as support. So this level was very strong as resistance 2 different times, and then the third time it came through and just swiped right through it. So there's going to be all these other psychological levels too, like we have 128,000 right here, and then we have 129 right here. So we can see that it hit it right here for the 129, we hit it right here, and we hit it right here. So really what I want you guys to do is figure out like, how am I going to mark my psychological numbers or my psychological levels and see how they're adding up. But I want to show you guys a couple of examples on US 30. Like I was trading US 30 earlier today. Okay, let's go to the New York session. So we can see that we did break this psychological level right here. We broke it, then came back up, tried to break it again, couldn't break it. And then we went through one more time to break it on this candle, just 2. And then it just completely dumped. So using the psychological levels is overall going to show you guys like, look, when it's rejecting a certain psychological level, that's going to give us confirmation whether it's going to be a good buy or sell. So here's a tip with psychological levels. If you are seeing the psychological level hit, or if you're seeing the market hit a psychological level and you're thinking it's going to reverse, enter right when it hits that psychological level and have your stop loss below that psychological level. For indices, probably about 500 to 1,000 pips. Now, when you're seeing it hit that psychological level and reject it, there's going to be a big push off that psychological level. But if you're going, and maybe you said, you know what, I think it's going to hit this psychological level, reject it, and push up heavy, and then retest, that's awesome. If you see the psychological level breaking, or if you see the market breaking a psychological level, wait for it to go and retest that psychological level. Do not enter it just because there's a big move occurring. So you really have to test this out and see how it's working for you. And this is a very prime example of, we saw this psychological level hit. Let me zoom in. We saw a psychological hit. We have a doji right here. It hit it the first time, rejected it. That's a nice entry right there. Then it came one more time and hit it. And this is where I would have entered. So overall, this is like where the money's at. You see it come down here and he closes the doji. You enter right as it hits that psychological level. Then you see it hit it another time. You're like, you know what? I'm going to enter another position. And then you see it hit it another time, but this candle moves away and closes. It's a bullish candle. You're going to enter again at the close of this candle and then move your stops below the psychological level or below this wick right here. And then you just ride it up. So go back in time, guys, mark up your psychological levels on your chart and see how it affects certain psychological levels. And with me, on my charts, the 31,000, the 32,000, the 33,000, I have them all marked up in white because psychological levels that end with more zeros are more powerful levels. That's a hack right there. Hope you guys enjoyed this video. See you in the next one. Peace.